Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. The Federal Reserve is expected to lower its key lending rate at least 3 times in 2024. Initially, investors thought that the rate cut would be deep, but thanks to solid economic growth, the rate cuts are expected to be much more shallow. On top of that, because of sticky inflation, the Fed said it was willing to maintain high interest rates for as long as necessary. Even when rates do start to fall, they're expected to remain well above pre-pandemic levels. All of this is good news for business development companies, or what we like to call at Income Investors, alternative banks like Oaktree Specialty Lending Corp, traded on NASDAQ under symbol OCSL. John?
Yeah, thanks, Mo. Yeah, Oaktree Specialty Lending actually loans capital to companies that have limited access to public or syndicated capital markets. As of December 2023, it had $189 billion in assets under management in what it calls contrarian, value-oriented, risk-controlled investment strategies across a variety of asset classes. And that figure continues to grow. The company's history of assets was just $5 billion in 1995. Its current portfolio is made up mostly of first-lien loans, which is 78%, followed by second-lien loans at 8%, unsecured debt, and joint ventures follow that by interest rate type, which is important. 84% of that portfolio is floating rate, and just 14% is fixed rate.
This company reported a strong first quarter origination activity.
Yeah, for the first quarter fiscal 2024 ended December 31st, 2023, Oaktree reported total investment income of $98 million or $1.26 per share. Now that was down slightly from $101.9 million or $1.32 per share in the fourth quarter of fiscal 2023. Now, net investment income was $44.2 million or 50 cents per share, compared to $47.5 million or 62 cents per share in the prior quarter. And during the quarter, the company originated $370.3 million of new investments and received $213.5 million back from prepayments, exits, and other paydowns and sales. At the end of the quarter, the company had $112.1 million of cash and equivalents and $907.5 million of undrawn capacity under its credit facilities.
It declared a first quarter dividend of 55 cents.
Yeah, as a business development company, Oaktree has to legally distribute at least 90% of its taxable income to investors. This helps explain why BDCs tend to have reliable, high-yield distributions. In the first quarter of this year, the company declared a cash distribution of 55 cents per share, or $2.20 on an annual basis, for a current yield of 11.44%. Now, Oaktree has also paid a special dividend over the last 2 years. Most recently, this past December, we paid a regular quarterly distribution of 55 cents per share, but it also had a special distribution of 7 cents per share.
How does OCSL stock look?
Well, like most business development companies, Oaktree Specialty Stock began to climb higher in early November 2023 after the Fed announced it was holding its key lending rate, and then said in December it would be cutting rates in 2024. From the beginning of November through January 30th, OCSL stock actually rallied an impressive 17.5%, and it actually hit an all-time record high of $21.04 per share on January 24th. Now, shares of alternative banks, including Oaktree, took a hit on January 31st after the Fed said interest rate cuts weren't imminent. The S&P 500 actually lost 1.6%, the NASDAQ fell 2.2%, and the Dow slipped 0.8%. While the broader markets rebounded the next day, interest-sensitive BDC or business development company stocks continue to feel the pressure. That sentiment could change, though, should the Fed introduce its first rate cut this June.
John, thank you so much for your insights. Just to recap, Oaktree Specialty Lending Corp is a great BDC with a growing diversified portfolio, conservative balance sheet, and a strong liquidity and flexibility. Of the 146 companies in its portfolio, 86% of them are first and second lien, with 84% of the loans having floating interest rates. This has helped the company perform well in the higher interest rate environment, and that is expected to remain elevated for years. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks you own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.